Hello and welcome to Crypto Concierge. I'm Tony, and this is my co-host Hiro. This is the first episode, so I believe that a little bit of an intro is in order. So let me tell you a little bit about myself. I'm Invest Tony at Twitter. I've been in crypto since 2018, back when Bitcoin was 6,500 a piece. I've seen quite a bit of things. I've been quite early in DeFi. I got my Uniswap airdrop. I was quite early in Bored Apes. I haven't minted my ape, but I bought it pretty early. So I've been doing full-time crypto for over 5 years now, almost six. And I always wanted to educate and spread the word. And whenever I meet people, I like to talk about crypto, obviously. So a lot of people who I met during my life, they ask me if I have any sort of a channel or they can listen to me. So I decided to go ahead and create a podcast. And the last trigger which pushed me to this move was my friend Hiro, who I met in the US a couple of years ago. He got back to me and he started asking me about crypto. Uh, and we just spoke a little bit and we decided that this type of conversations probably would be a good format for the podcast where a person with virtually zero prior knowledge about crypto is asking someone who has quite a bit of experience. And I think that you, my crypto friends, you're not gonna get a lot of value from this podcast, but I urge you to share and like this podcast. Send it to someone who is asking you about crypto. We'll try to keep it as newbie friendly as possible. We'll explain everything and ask genuine questions and respond to them. So now I'm passing the mic to Hiro, and he can tell a few words about himself, and we'll hop right into the content.
Hello, thank you for your kind introduction to this. And it is true, we have met a couple of years ago in America, and it is also very true that whatever he just explained, I have zero knowledge of, but the curiosity is here. And I have learned through this friendship how he has been living and how he has been managing his life. And through this crypto, realizing a lot of dreams in his life. I have become to be interested. So I am excited to be a part of this. Thank you and look forward to it.
Yeah, well, ask right away. I know you had some questions brewing, and we were
Yes.
kind of postponing this conversation just to get it recorded. So
Yeah.
now let's just get right into that.
Right on. Yes. So uh, to be very frank, I do not really know how the way I see my money if I held them in my hands and putting them in my piggy bank coin, that would accumulate as I put one coin in. You see a clink, and then the bank becomes heavier. Now, with the crypto, I don't sort of understand how one can uh, appreciate its value for its practical purposes that it seems to be real now in this world, but I just don't see it being a reality of how that can be a part of my life. Meaning, how does this value translate to my real life?
Okay, yeah, that's I guess an interesting question. Well, first of all, when you put the money in the piggy bank, you're not investing, you're saving money, right? At least that's what we call it. So when you take some cash, put it aside, let's say under the mattress or in your piggy bank, what you do is you save money, right? You can do the same with a savings account and they will pay you maybe a tiny bit of a percentage right now. Um, when I'm talking about crypto, it's more about investing, right? Technically, you can do the same thing in crypto. We have stablecoins. They own blockchain tokens, which I can explain what does that mean. But the idea is that they usually peg to some fiat, right? Be it dollar or euro or some other currencies. And you could do exactly the same as you said. You can just pile them in some wallet, and then you will see them appreciate on your screen rather than in a piggy bank or in a bank. Now
Hmm.
the yeah, I guess the important question is to understand the importance of investing. I don't know. Do you invest in anything? Do you have any investments at all?
Partly, yes, through financial, services,
So you have probably
stocks.
like a part of your, yeah, it's probably a part of your long-term savings. Yes. So why do you do that? Why do you invest? Let me ask you a few questions so we can get back to your question. Why do you invest other than just saving?
Um, hmm. I do not have actually a strong motivation to pursue the commonly known aspect of certain investment. So even if it's financial, I have never really been a strong mm, investor, so to speak. I would put a lot more into my uh, labor, so to speak, to earn the money. Now, with the money earned, I have pretty much let it sit or use it, so to speak, to further quote unquote invest into the myself, work, whatever they may be. So I have not been an aggressive investor with my finances. Um, so having understood that this is more likely an investment adventure than a saving adventure, or rather swapping uh, a currency, right? I mean, when we have a coin, whether we put it in the piggy bank in my room or take it to the bank, the fact that it is a dollar for a dollar remains the same. So with the crypto, it's like me buying gold.
Yes. Well, there are lots of layers here again, right? First of all, well, I don't know, first of all, but we will be talking about investing a lot because this is the fundamental
Mm,
idea behind, the whole crypto thing. But you can use crypto just as a savings, as you said. It's actually a pretty unorthodox topic. So it's interesting where the conversation is taking us. As I said, this conversation is not scripted, and I'm actually very excited to where it's taking us. So actually, there is a benefit in savings in stable coins, let's call them that, in crypto compared to your bank account or your piggy bank. Because digital currency is way easier to send and move and send it to abroad, move with it. For example, if you want to cross the border and you have more than $10,000, you'll have to declare it, right? And even if you can declare it, it'll just take you time, right? It's not like you're just hiding something. You just need to spend time doing that, right? So when you're transporting a large amount of money, let's say in cash, then it's obviously you know tied to some sort of risks and inconveniences. When you want to send a large or small amount of money uh, via bank transfer or even some sort of neo finance services, you also likely experience charges, maybe questions from the banks. You need to know quite a bit of information about the person you're sending it to. All right, so all these things with crypto coins are avoided or at least minimized. So once you have your $100, let's say, in stablecoin, you can send a 1 cent to someone, or you can send a whole $100. All you need to know is a digital wallet. Digital wallet, or rather private address. Private address is like log into your email, let's say. It's usually alphanumeric, but it can be also just a simple name. Like I have investoni.eth, for example. If you type it in the wallet, you can send money there and I'll receive it, right? You don't need to know anything about the person you're sending there. Is it a company? Is it a person? Where does he live? Yes, it comes with
mm,
some trickery, maybe potentially, but for the majority of people, this is it's a life changer, right? Because we know a lot of
mm, mm,
people go and they earn money in the different countries, and then they send the money, let's say, to their
mm, mm,
back to
mm,
their families, and they save a lot on the fees. So
mm,
even just comparing saving in crypto, saving, let's say, in dollars, but doing it on a blockchain allows you to do it more effectively, I'd say efficiently. So even if you want to save in dollars, you still potentially might want to think about doing it in crypto. And I'm not even talking about the percentages which could be earned on your stable coins,
Mhm. Mm.
because there are a lot of crypto services who will pay you yield on your stable coins. So like you go to the bank and you deposit your dollars, and then they will offer you some tiny little percentage because that's just what they do. In crypto, you can earn 4, 5, 7, up to maybe 20% a year on your stable coins.
Mm.
It's the same dollars, $100, you put it in there, and you get this percentage. And there are different types of services, different sources of yield. We always tend to ask in crypto, where's the yield coming from? And that's some topic for some separate video where I'm going to be explaining to you how to find a good actor where who you can trace where the yield is coming from, or how to avoid a shady one where it's a black box. You throw money in there and you just pray for the better outcome. But that's the saving aspect, right? Now, if you want, we can go to investing, or you can, ask me something else.
Well, let's stick around for that saving component. So right now, I am looking not for your personal persuasion because I'm already persuaded personally. That's why I'm here. I see you handle these things, and I am therefore persuaded. However, uh, you know, the perhaps this is just still new, although of course it's not quote unquote new. Um, for the fact that it just seems to be so um, not yet prevalent. It's just so scarce that people are either talking about it or actually engaged in this. Perhaps there are more people than I can imagine, or it's because of the people that I am with that do not have this topic in their day-to-day conversation. But it just seems to me for um, for lack of a better word, why wouldn't all of us go and do this? I mean, what is the actual hindrance of all of us now uh turning in this over to the crypto savings?
Yeah, that's a great question. And as I said, as you said, we're not maybe that early. In crypto, we always, for years, we had the saying, we are still early.
Hmm.
And now I start hearing people saying we're not that early anymore. Bitcoin is 100K. So
Mhm.
it's not as early. Yes, of course, it's not as early as it used to be. I got there at 6K. Someone got there at $1. We probably don't hear much about these people because they prefer not to speak and they just enjoy their life. Yeah, so it's not that early anymore, but I think we are living at a very interesting time when there is finally mass adoption coming, and I think our podcast couldn't be coming at a better time because there will be a
Hmm.
lot of people like yourself, maybe older generation, maybe younger generation, maybe all types of people, men, women, in different countries hearing more and more about it from mass media. Now the United States is debating strategic reserve. Just today,
Hmm.
the news are coming that
Hmm.
Brazil is potentially wanted to invest in Bitcoin. So we will hear more and more people interested. They want to learn more, and that's where you and I, we're coming in there, right? And we're answering the questions which these people are going to have. And one of the main uh, objective for me in this podcast is to save people from falling into crypto scams, because there are a lot of when there's a lot of money there's a lot of grifters, and people try to prey on the ignorance of people, right? So we will be going in depth in how to spot and avoid um, crypto scams and not lose all your money, right? But getting back to your question, why not all people are using it so far? I think that the main problem is still on ramp and off ramp, because how would you buy? You have to buy crypto first to be part of this world, right? And then if you want to sell it and and buy something in the real world, then not everyone is accepting crypto, for example, right? I know there are people who've been living in the crypto world who had a job, as we call it, in Web3. I'll explain what Web3 means, but people who work for crypto companies who are getting paid in crypto and who maybe live in crypto villages or in the area where crypto is very developed, and then they just go and buy stuff for crypto. Like these people exist. Yes, it's not everywhere, but they are here. And now in
Mhm.
2025, off ramps and on ramps are getting more and more widespread, easier to onboard. Like yeah, I know you live in the US. You probably don't have any issues buying crypto. All you need is just download some app, Coinbase, Gemini, Kraken, Binance US, and many others, right? And you can just put your social security
Mm.
there, probably a driving license, and then you can just directly connect it to your bank, and you can buy, as much crypto as you have there. Now, when you will be selling it, you can do it the same way. And with one tap of a button, you just convert it and you have it withdrawn to your bank account. Now, obviously, there will be some tax implications. If you made some money, then you'll have to um, follow the process. And on this topic, we're not going to be giving you any advices. You probably need to contact your CPA. But if we're going to have a lot of questions, then we might even get someone to talk professionally about it. But so right now,
Mhm.
there is not a lot of issues getting on and off. It's just that people are, I think they don't know really the benefits of entering
Mm.
the
Mm, mm,
crypto.
mm.
Like they don't know that you can make way more money in there, right, than in traditional finance. But now when Trump's coming, he's trying to push, his family is trying to push some services, and I think
Mm.
they will try to make it as easy to onboard Americans, for good, for bad, with their own risks. But I think that's their direction where they want to push their product and project there. So let's just educate people. And I think that there's no really downside of entering crypto if you're doing it properly, avoiding all the scams and understanding what are you doing, because it's very important to understand. Don't just rush. Don't just throw the money in the first link which pops up in your Google search or somewhere. Educate yourself and then do it you know slowly and with your crypto concierge maybe
Mm.
at your disposal.
Great, great. Thank you. So what that means is, you mentioned as much as you want, we can go ahead and buy crypto. Um, Now, how as little as possible can you start?
That depends on the services.
I see.
I'll have to go back and like review,
Hmm.
but there's literally no minimum. I know there are like Cash App or something similar to that where you can like just set up $5, something like that, and they'll just deduct it from your savings account, checkings account, and then you'll be just buying, let's say, Bitcoin $5 a day or $5 a week, whatever you want to do. There's
Hmm.
figuratively no minimum.
Interesting. That's very helpful. Okay. So I
Yeah.
think that may be a good way to start, just to know what it's like to have ownership, right? That'd be a good start for me, I think.
Yeah, absolutely. And
Mm.
so you're not asking these questions because I guess you wouldn't know to ask it, but let me
Very good.
explain a little bit, right? So when
Yes.
you buy crypto on an exchange, let's say I would assume that for American the easiest way would be just to download a Coinbase because it's with all the licenses and potential checks, and it's a public company, stock ticker coin, and like if something goes wrong with Coinbase, a U.S. citizen or a resident can go to all sorts of courts, and they'll probably get their money back, at least to a certain extent, right? Because that's the I understand it can be a big concern for the people who are used to traditional finance, where they can pick up the phone and call the bank, like, sorry, I sent the money to the wrong account, like freeze this
Mm.
transaction, and they'll probably do it, right? If you don't do it every day, but once in a while they'll do it. In crypto, it's slightly different, right? There is no tech support. when we're
Hmm.
talking crypto as a peer-to-peer network, because cryptocurrencies were initially created as a peer-to-peer cash financial system, right? The exchanges are the companies who are a mediator between real world assets and the crypto assets, right? So if you go ahead and create a Coinbase account, for example, you connect it to your bank account, you buy your first crypto, yes, you do own a tiny little, let's say $100 of a stable coin or $100 worth of Bitcoin, but it's still sitting in your exchange, right? Which is usually referred as a custody service, right? So they are holding your crypto for you. Um, and your Coinbase account, let's say, will look like just a normal bank application, right? With your login, with your email, when you can log in and see your account there. Friendly app, everything. But do you really own the crypto or not? Right? Uh, some people would, like crypto people would argue that you're not. We have an expression which can be quoted as not your keys, not your coins. What does it mean? What keys are we talking about? Okay, so cryptocurrencies live on a blockchain. Do you want me to explain what's a blockchain? No, it's too much for a first session.
Maybe too much for first session, but I will definitely need explanation on that. I have no
All
idea
right,
what that is. So it may be okay for the first session too, because we have time, or we have many more sessions to come. So
sure. And dear viewers, listeners, if you have any questions, feel free to leave them under wherever you're watching this, YouTube, Twitter, or any other platform. We'll get back to them, and then Hiro will ask them, and I'll try to respond. And if I don't have any response right at the spot, because again, it's non-scripted, I'll get back to this question in the following video. So blockchain is a distributed ledger. What does that mean, right? Actually, it's funny. When I joined the crypto, it was a joke. Back in 2018, everyone was asking what's a blockchain, and no one could answer. But it's actually pretty simple. Blockchain is a distributed ledger. Think about, let's say, an Excel spreadsheet or what's called the Google Sheets, right? Where there are all the lines which have the transactions. Hiro sent 5 Bitcoin to Tony. Tony sent 3 Bitcoin there. So all the lines are written in one sheet, right? And then this sheet has a limited memory. So there are only a certain amount of lines which can be filled. Once it's filled, uh, the next one should be filled, right? The next sheet. And these sheets are connected. They forming the history back in the time. You can scroll through it. Everyone on the internet can find this ledger and scroll back and see who sent who. There are no names. There are only addresses, public addresses. I mentioned them before. Um, and all these sheets are connected to each other. There's a little encrypted part which makes sure that this sheet is just not appeared out of nowhere, but it's linked to the previous one. That is a blockchain. The sheets are blocks, and there's a chain because they are connected. I'm oversimplifying it, obviously. Don't judge me from technical perspective, my dear nerds, but I'm pretty sure that I explain it the way it's possible to understand. Right here, do you understand? Do you follow?
Mhm, mhm.
Right. Um, so this is blockchain, right? Bitcoin works like that. Ethereum works like that. They're slightly different, but for the purposes of this first introductory video, we'll just leave it at that. So, um, and the crypto is living from one wallet to another when you send it, right? So, what is the wallet, right? Wallet it is an app, just like you have your physical wallet where you put your notes and coins in. We have digital wallets. There are lots of them. The simplest one to get would be just go on your App Store or Google Store, whatever you're using on your phone. just go like crypto wallet and you'll see tons of them. You will see Trust Wallet, you will see MetaMask, you will see Phantom, and all of the different wallets are right there. Now, what do they do? When you download an app, a wallet, it will ask you to write down 12 or 24 words, uh, just just nouns, or sometimes I think even adjectives. These you should write down. You never take a picture of them. You never take a screenshot of them. You ideally don't even type them. You just write them on a piece of paper. Then you click next, and you will see your app shows up, and you will have there Bitcoin, Ethereum, and some other cryptos just listed there. You have zero there. You've just created a wallet for yourself. If you want to send crypto there is a button which says receive, and it will show you an alphanumeric line right there. This is your public address. You can share it with everyone. You can, I don't know, get a tattoo and then show it to everyone who wants to send you crypto, and boom, they can send it to you, and you will see it appearing on your phone. And this address will be shown on the blockchain whenever someone sends you crypto, or then when you sending it to someone else. This is the address which you're going to see in the ledger. Now, when you bought your $100 of Bitcoin on your Coinbase, for example, it is sitting somewhere there on their wallet, the one they are managing, and you don't even know how it's looking like. You don't care. Now, when you go to withdraw from Coinbase, it will ask you where you want to withdraw it to. And then you put this alphanumeric combination, which appeared on your wallet. Make sure you're picking the right asset. It's Bitcoin. It's Bitcoin. I will show it one time just so the viewers who are watching us on YouTube or Twitter, they can see it for themselves. And then this cryptocurrency will be transferred from the Coinbase, from the company, to your own wallet. What just happened? You became your own custodian of your crypto. Now you're owning this crypto because it's on your wallet only. No one can take it from there. No one can seize it. No one can freeze it, at least with a Bitcoin. Now, what was the 12 words, you might ask? What did you write down? These are the keys. Remember I said not your keys, not your coins? This is your key. Your key is like a password to your wallet, but it's more than a password. It is the way to restore it. For example, if you lose your phone, what happens with your crypto, right? It doesn't disappear. Can you access it? Yes, if you have the 12 words. If you have the 12 words, you buy a new phone, download the same app, and you put these 12 words in there, and you will see your crypto there. It is not on the server. It's not saved somewhere on the clouds, or it's not the phone, not the Apple is keeping it for you there. It is there in the ledger. So when you read the ledger, you can see, the visible part, but it's also the same blockchain is keeping all the information encrypted about your coins. So having the keys, you can like log in back to you can basically get this signature. It's also called a signature. You can get to your wallet, and you can sign the transaction, and you will be able to move your crypto back and forth. I know it's a lot. If I didn't make sense somewhere in the way, let me know, and I can explain it in some other way.
Very good. So hopefully soon I'll get that set up with your help, and then we'll get it started on that one.
But did you understand the difference between keeping the crypto on the exchange and keeping it
Yes,
on the wallet?
yes.
Okay.
So again, it doesn't make sense then not to go to a point where you do have your own wallet.
Arguably so. A lot of crypto people will say yes, but
Okay.
there are benefits on both sides, and some people will hate for me saying it, but it's true. Some people prefer to take control over their finance, over their lives, over their everything, right? Some people prefer to delegate some sort points of their aspects of their life to someone else, right?
Mm.
So now, if you lose the 12 words and if you lose your phone, you screw it. If you didn't remember them, you're losing your crypto. There is no other way to recover it. You can't call anyone. You can't complain. It's gone. It's not gone. You just can't access it. In fact, it's not
Where does
gone.
that go?
It's lost. It's
Does it go
lost.
does it go to the next person in line?
No, no, no. It's just there. It's like you dug the golden coins in the earth and you forgot where you did it. So it's just there.
Okay, sounds
So
good.
you're burning
Noted.
it. Essentially, you're limiting the supply. You're burning the supply. We call it burn because it's just
Okay,
inaccessible. Without these keys, you cannot do anything with it.
I
And
got it.
some people say that there are up to 2 to 3 million Bitcoin lost in this matter. So there's only 21 million Bitcoin ever to exist, and roughly 2 3 million are lost exactly like that because people cannot remember their keys. Because back in the days, Bitcoin was worthless. And, you have 50,000 Bitcoin, who cares? I got them for free. Or, hey, your mom just throws your old computer out, you sell it for $50 and, someone just erased the hard drive, gone. So that's the downside of
Hmm.
it, right? Then you can just lose it. But the upside that no one can prohibit you from accessing these funds. And no one doesn't need to know that you have them because they don't ask you for your ID when you download the wallet. When you download the wallet, wallet is just an app which facilitates you reading the blockchain and accessing the blockchain. You just download the app, 12 words, that's it. They don't know, the app doesn't even know if you're alive. Maybe you're an AI. AI can use the wallets, right? So, and then with the keeping the crypto on the Coinbase, obviously, if your account gets hacked, you can write support. Hopefully, they get back to you in a couple of months. No, I'm just kidding, but but you can show your face because when you created it, you created with your ID. You can prove that wasn't you, and they potentially will help you get your access back to your account. So there are pros and cons, obviously, but at the same time, if I don't know, there's a huge load during this time, Bitcoin is skyrocketing or it's dropping. You're trying to log into your app, you can't because the server is overloaded. Then you can't buy, you can't sell, you can't withdraw sometimes because they just have some issues, maintenance, and you can't withdraw. So pros and cons, as everywhere in the life.
Hmm. Okay, understood. I just noticed something that you mentioned, and that you pointed to that number on the whiteboard. So what is that?
Yeah, it's a little crypto meme. I have this whiteboard. I'll put some jokes and references for the crypto viewers. This is infinity divided by 21 million. This is arguably the price of a Bitcoin. We like to say that because there's can be only 21 million Bitcoin, and all the other assets are infinite. You can print more shares. You can create value, and people do create value on a daily basis, but Bitcoin can only be 21 million. So when someone asks me for a fair value of Bitcoin, a price of a Bitcoin, that's the answer. Because if you
Wait,
denominate everything in Bitcoin, then,
so when you say that 21 million is the cap, uh, what does that mean? So that there comes a point where you no longer can do something, or how does that? So then it just becomes supply and demand kind of a market, where if do we ever, where are we at if there's such a number against the 21 million?
yeah,
Like
again,
20 20 million?
yeah, great. A lot of questions in the one little one. Yes. So, um, let me start again. A couple of steps prior to this. pretty sure that pretty much everyone right now heard about Bitcoin, heard that it's being mined, right? So there are some people, some computers which are mining Bitcoin, right? So let me explain how mining is happening, and then the 21 million hopefully will start to make sense. So to mine a Bitcoin, you need a computer. Remember the blockchain, the blocks? So who gets to fill up the block? The miner does. When you fill up the block, you're getting a reward. So when a computer, let's say there is a pool of transactions. There are some transactions which happened in the past 10 minutes. You send it to me, I send it to you, but they are not confirmed yet. They are just waiting to get into the block because the blocks in Bitcoin blockchain are roughly coming in every 10 minutes. So during the first like the 9 minutes, there are some transactions which are being sent, but they haven't not been added to the blockchain yet. Now, there is a competition going on which computer in the Bitcoin network will get to fill them because everyone wants to fill the block because they will get the reward for that.
Hmm.
Right now, the reward is 3.125 Bitcoin, so roughly 300K. If your computer gets to fill up this block, all you need to do is put this transaction in. But how do we decide which computer gets to fill up the block? Because everyone wants. You want it, I want it, obviously. Now, computers have to solve a cryptographic puzzle. Which computer solves the cryptographic puzzle first gets to fill up the block and get the reward. Now, this puzzle is a very interesting one. It's impossible to solve it through computation. You only need through mathematical equations. You only need to guess the answer to this puzzle. Again, I'm oversimplifying, but stick with me. There is a certain number which matches, which is the right answer to this puzzle. So all the computers are trying to find it. They are literally going like 00001, 00010, and then they just keep going until they find the right. Now, once this computer solved the puzzle, boom, correct. It sends it through the internet to all the other computers who are mining. And the cool thing about this puzzle is that it's very difficult to find the answer. But once you have the answer, it's very easy to check. So if I tell you the answer, you can check. Okay, correct. On to the next one. So the first computer which solved the puzzle gets to take transactions from the pool, fill up the block, and start over solving the puzzle. So that's how mining is working. You are doing the work, solving the puzzle, filling up the block, getting the reward. Now, Bitcoin has two very cool features. One of them is called halving, or halving, depending how people like to pronounce it. Bitcoin was invented in 2009 by anonymous guy, Satoshi Nakamoto. We don't know it. Guy, girl, a couple of people, intelligence agency, aliens, different theories exist, but Satoshi Nakamoto. Back in the days, for every block, which is roughly found every 10 minutes, the reward was 50 Bitcoin. They were worthless at the time, but still, Bitcoin is Bitcoin, 50 Bitcoin. Every 4 years, this reward per block is being cut in half. So 4 years later, it was 25. 4 years later, 12 and a half. 6256, now 3125. Now, so far, it's been since 2009, roughly 16 years, right? 15, 16 years. We have already found over 17.5 million Bitcoin. It looks like we're already there, right? Like most of the Bitcoin have been found. But due to this geometrical progression, it will take us over 100 years to find the last Bitcoin. And the last Bitcoin will never get found because this halving thing. So theoretically, yes, in Bitcoin you're earning less, but because the price of Bitcoin going up, you're breaking even. Um, that's one cool feature about Bitcoin. Second cool, so yes, so answering your question at this point, and then I'll get to the second cool feature. 21 million maximum supply. We will never get there. We'll just keep getting lower and lower reward. But reward, the block reward it's called, it's only part of miner's compensation. Because when you send a transaction, you pay a fee.
Mm.
It's the fee depends on load of the network. If no one's sending transactions, then technically, actually, you can send Bitcoin for free. You don't have to put a fee. It will still get in the block. It's not a case with the other blockchains, but with the Bitcoin base. But usually, you just when you're about to send a Bitcoin, the modern wallet will tell you suggested fee, but it's up to you. You can put it less than that, or you can put more than that. If you put more than that, you will get in the next block, the one which will be found, probably 99%. If you put less, then maybe you'll have to wait a little bit longer. By the time when the demand drops, half empty blocks, or well, not half empty, but you will get there. So this reward is another part of my conversation. So he's taking 3,125 from a network. And on top of that, we can call it a tip, let's say. So the theory behind it, that later down the road, the tips, the transaction fees are going to be more than a block reward.
Mm-hmm.
And in dollar value, they will still cover the cost to run the equipments, because you can't mine Bitcoin on a laptop right now. You need a special mining equipment. It's a very powerful computer with the sole purpose of mining Bitcoin. Now, second cool feature about Bitcoin. Remember when we spoke about the puzzle, which a computer has to solve to be able to write transaction in the block. Now, this puzzle is this puzzle, right, is has its difficulty, and this difficulty is adjusting, because back in the days in 2009, the strongest computer was probably roughly as strong as an iPhone now. So back in the days, you couldn't solve today's puzzle. The puzzle back in the days was way easier, but the network is automatically adjusting to the power of computers mining it. Every 2 weeks, there is what's called difficulty adjusting. So if there's more computers start mining Bitcoin, the puzzle will get more difficult. If there is less computers mining Bitcoin, the difficulty of the puzzle will drop. That happened a few years ago when China banned mining, and there was like over 30% mining happening in China. Literally one day they had to switch off their miners, their equipment, and the difficulty of the network dropped, and we're back to every 10 minutes. That's how every 10 minutes is possible, because the difficulty is very much in line with the power of the network. So even if a government, let's say, decide to put all the computational power to mine Bitcoin, it will be very hard for them to do it, because the eventually difficulty will adjust. And I'm not going to talk about forks right now, because I know I might have triggered some folks. But yeah, basically the difficulty is adjusting to the network. Did I just confuse you, or could you follow me?
Well, I'm gonna need a lot of layers, of course. But going back to one thing that you mentioned, how you said, um, this was invented, right? So, we are going to theoretically or practically dig and mine something that somebody invented, so to speak, in the way that is out there. Now, there is that out there, which using a computer, as you say, can mine, and that mining activity is solving the puzzle. So this puzzle, difficult adjusting that takes place is so that one, not the mining itself becomes more difficult, but actually the solving of the puzzle becomes more difficult. So, so to speak, more hidden. It's hidden more and more every 2 weeks. Uh, and
Or
so we need
less.
to dig
Yeah.
harder. We need to look harder. Uh, so if that's the drive that drives people into its infinity because of the way half reward every 4 years, we can easily imagine the the curve that it's reaching towards infinity, and therefore, yes, it's in theory never ending, and in practical world, somehow that drive bounces into the world with a different demand, so that it sustains the, the downwardness to infinity with an upwardness of infinity, because it tries to bounce back the other way when we are facing that kind of a direction. So then, so one, I am understanding, and this may not be the right word, and you may not like this word, but so is it still somewhat artificial? Now, again, I'm not sure if that word is valid, because is paper money artificial, right? So I am not trying to go into that angle when I say artificial. What I mean is, when it's invented like that, just as money was invented like this, but because of its nature in the way that is driven by this mining process, uh, what if people lost interest in mining?
Yeah. Okay. So everything like in somewhere prior to this question, you asked me something along the lines like, is it based on supply and demand, or
Yeah, yeah, yeah.
yes, every market is based on supply and demand. Every market is based on supply and demand. There are goods which are less susceptible to this, which, like, I don't know, say medicine, right? You'll probably have to scrape and buy it for whatever price, right? But all the other things are mostly driven in by supply and demand. So when you mine a Bitcoin, actually, it's interesting that you noticed all the benefits of it, right? Yes, it's very easy to forecast the supply. It's very easy to for a fact uh, like where it's going to be like 50 years from now, let's say. And it's impossible to do with any other asset or commodity in the world, right? So, for example, if the gold, we don't know, maybe tomorrow the asteroid is going to fall full of gold, or they'll find, like just recently, they found gold somewhere else, right? Same with oil, for example. They constantly find, they think, oh, that much oil. Like since I've been, I don't know, in middle school, they were saying, oh, we're going to run out of oil in 10 years, and they keep finding a new one. So, and same with the price. Let's say the price of gold. If the price of gold doubles overnight, like I bet you're gonna buy yourself a shovel and just go dig, right? Because you can. If the price of Bitcoin doubles, you wouldn't be able to find twice as much. You will still it'll still be the same amount of Bitcoin, right? So it's not a bug, it's a feature. It
Mhm.
is this predictability helps all the models to build all the models, right? And because the only thing you need to mine Bitcoin, to find Bitcoin, is electricity. There will be always, first of all, there is like a cost to Bitcoin, right? So there's not a fair value, but there is a cost, right? And this cost is different. If you plug in a miner in your bedroom, your cost will be certain. But if I do it in mine, that will be a different one. And just actually today was an interview from the Prime Minister of Bhutan. Do you know the tiny little country of Bhutan? They've been mining Bitcoin for years. They have over $1 billion worth of Bitcoin there. they as they have not much things there. They don't have resources. They don't, well, maybe some, but not as much. But they have a hydro dam. They have a hydro
Mm,
dam. They don't need anything else. Fast internet and electricity, right? So there will be always a market. There will be always someone who has access of electricity. Plus, well, am not even answering. I'm getting to your answer, but I just like this anecdote a lot. That some people say that Bitcoin is bad, is taking too much electricity. And I'm not even going to compare it to other things because, like
mm,
Christmas lights, they take tons of electricity, and
mm,
no one's complaining, which I'm not complaining either. But Bitcoin mining operation is
mm,
very um, like the big miners, right? They are easy to negotiate with. For example, I know in Texas, in high season, there is a huge demand for electricity for ACs and all this stuff to help cope with a super high temperature. But in the lower season, there's excess of electricity. So that's why Texas is big on mining because miners they get great price when there is excess. But when there is an overload on the system, they can turn off the miners. They don't have to do it. So they are
mm,
helping substitute um, excess of electricity. Plus, there are real stories when somewhere in the middle of nowhere in an undeveloped area, there is some sort of electricity, a river or a windy area or some other source of electricity. I know El Salvador is mining with volcanoes. They're extracting the heat from the earth, right? So the miners come there, they build a electric plant, they start mining, and then the village, the town is forming around it,
mm,
and maybe then the miners can easily move somewhere else, leaving the infrastructure for the other purposes. So um, is it artificial? What is artificial? The demand? Demand is not artificial because demand is, the price is what something is willing to pay, right? So if someone is willing to pay this much, is it artificial? I mean, I wouldn't say so because some people find the value in it. What's the value in Bitcoin? It's predictable. It's guaranteed to stay at 21 million forever.
mm,
And it's not controlled by any organization. It's immutable. You can always send the money. You can always there is no one entity responsible for this. And actually, the fact that Satoshi Nakamoto is anonymous is great because you can't call him to Senate, you can't call him to Congress, you
mm,
can't put him in jail, or you can't give him a medal. He just gave this to the humanity and didn't ask anything in return. So, um, is the demand artificial? I'd say not anymore because there's enough players in the market who value the qualities Bitcoin possess.
mm,
It is literally very similar to gold if you think about it. Uh, Limited supply, difficult to find, difficult to you can't replicate it artificially, but it has benefits compared to gold. It's easier to move. You can pay a little amount with it. You can pay a huge amount with it, which is difficult to do with gold. It's easier to move, as I said, cheap to store. You just need a wallet, and that's
mm,
it. So, and then the supply is not going to dry out because if someone decides it's too expensive for me to mine, the price of Bitcoin drops, my electricity is too high, that's fine. There will be someone who's coming and turning off his old miner, which he had to turn off because the price was, the difficulty was too high.
mm,
Now
mm,
you turned off your miner
mm,
because it's not interesting
mm.
to you. I can turn on mine because it was my electricity at this difficulty. Now it starts to make sense.
Got it. I am starting to little bit understand the game here, so to speak. And now, as I hopefully try to get in and then look forward to really getting to the how to part of it because if this was all simple and easy, this one session would do it, right? So
Sure.
I'm gonna look forward to really understanding where the so-called fun in this is, and also where the challenges are in this, and also, the fruits, right? We're obviously, I mean, I am looking to enjoy this. Not in just financial ways, but also experiencing, knowing that this is now a reality of our world, and it's yeah, it's just intriguing and it's fun.
Great. I'm glad you liked it. I think you got us to a nice point to wrap up our first episode. Yeah, and maybe I can
Yes.
just give a few topics which I think our viewers would be interested to look forward to. I mean, I will explain to you again how to safely keep your crypto, what in depth,
Mm-hmm.
what's the difference between exchanges and the wallets,
Hmm.
what types of wallets there are.
Yes.
As I said, most common scams, and I'm always blown away by the way people who are
Mm.
ready to invest in crypto, who already decided to, and they just get by a bad actor, and then they will have a bad taste of their mouth when they hear crypto for the rest of their lives, and that's exactly what we're trying to avoid, right?
Mm. Yes.
So
Thank you.
all the DeFi, we have decentralized finance world where you can do all the financial operations completely without the banks, and where how you can earn passive yield, how you can actively manage your portfolio without necessarily trading, right? We can touch a little bit on trading. We're not going to go in depth on that because that's a whole separate conversation. And there are a lot of courses and videos on that, right? So this is just a few things and real world applications for crypto, ways to, to dip your toes in crypto and earn some crypto tokens from a new project because there is a lot of projects which are launching in crypto daily, weekly, monthly, and they like to reward the early users. So how can you from zero knowledge whatsoever, start playing, start having fun with the crypto technology, maybe read a paper, watch a short video, and then get some
Yeah.
airdrop. Airdrop is the money, the crypto coins which are falling from you from the skies, and that's an amazing feeling when you didn't need to do anything and you just got some coins in your wallet, and they are worth
Mm.
something. So we'll talk about things like that, and I'm sure you have some other questions which I will be looking forward to
Yes.
answer.
Yes. Yes. Thank you. Thank you.
All right, well, we'll see you in the next one.
Yes. See you.